Boom! Aussie yen on the weekly, just to give some perspective. Price has dove down into what looks like the darkness of the abyss. But if you look left, it actually was a previous level of structure. And we started making our way back to reality after that. As we go down to the daily, you're going to start to see not your best opportunity. This isn't a textbook example, but we do have a head and shoulders pattern that is forming. We have a left shoulder there. We have our head down there. We have our right neck right there, connect the dots for our neckline, and then we're putting in a right shoulder as we speak. Now, for the head and shoulders pattern, we do need a violation of the neckline to solidify it. If we do violate this neckline, there's not really a place to go that much higher to the upside. So overall, I'm not too interested in the head and shoulders pattern, but it is going to come into play when we go down to the lower time frame and see what's on my radar. Now, on the radar here on the lower time frame is something interesting, right? We've come down to this previous rejection level. You can see a nice rejection wick down here, a nice rejection wick down there. We have touched, tickled, and tested both of them, and this is a really nice candle. What we would prefer to see after this is a nice higher high, higher close, a break above, close above. So you see how this candle right here, rejection and then a lower low, lower close, beautiful combination, right? We can probably find a million of these, right? You see all these down here. I'm not gonna find any more now that I say that, Akil. I always do that. I gotta find one more for video's sake. Come on, higher high, higher closes. Oh, no, haha, look at that. Another one right here. Nice rejection. Higher high, higher close. The market takes off, right? We see it all the time in the 2 times that I showed you, right? That's what we're looking for at that level. However, we get something quite different. We get what at the time, right? Because we know the wick represents the highest point during the session, was a higher high, higher close, where it looked all delicious. And I'm sure some traders that are suffering from FOMO, the fear of missing out, decided that I'm going to get involved because the move is being made without me and blah, 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 blah. I don't want to miss it. And they got involved only to come back and look at their screen and be like, son of a boop, right? It actually didn't break above, close above. And now they're kind of, maybe snorting the hopium and hoping that it goes in the direction. Or if they are a professional, they wouldn't have broke the rules in the first place. But if they're a professional, what you do is if you ever find yourself in a trade you're not supposed to be in, you exit immediately, regardless of where it's at. So this is not such a nice candle because it shows us that although the bears ran a steam right here and the bulls were big and bad and pushed it up, the bears weren't done fighting and they said, ho, 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 ho. Not so fast, my friend, and pushed it back down. We then ended the week with what we call an inside bar. That's a running joke from the live room. 99% of you guys don't get it, and now I sounded like an idiot. But this is called an inside bar. An inside bar is essentially, it's a bar that completes, completely within the previous bar. This big bar is called the mother bar, right? And it pretty much means consolidation, indecision, and we know that contraction leads to expansion. So we would expect a breakout in one way or the other. Now, although you can go and search the realms of technical analysis for inside bars or use a nice little inside bar indicator that most platforms should have, look at that, and try to trade every single inside bar, I promise you from personal experience, that will be a mistake. My advice is to do this. Have a biased inside bar approach, meaning that although this is an inside bar, you don't really have any intentions of trading this to the downside, because if you were to trade it to the downside, right, your entry would be here or here, if not there or there, depends on how aggressive or conservative you want to trade it. But if you break to the downside, where are you likely to go to? Well, right back into a rejection zone. Well, I don't want to do that. Or right back into another rejection zone. I don't want to do that. That doesn't seem safe at all. So you're probably looking at this and saying, downside, not too much going for me there. But if I were to trade this to the upside, and particularly if we break this higher level, drawing tool, activate, there you go, then where are we most likely to continue to? Well, probably up here, which offers a lot more potential from here to here than the potential we had from here to there. So This is an inside bar, a bias inside bar that you can look to take as a bull. If we break that level, and again, there's two ways you can look at it. You can do the aggressive way, which means a break above this level where you literally just put a buy stop here or above the mother bar. But if we break that level, then boom, you're involved in a breakout on the way up. This also puts you again at the right side or the right shoulder of the head and shoulder. So if you are someone that wants to take this more aggressively and shoot for more, you greedy thing, then you can look to trade this all the way back up to the neckline here. That'd be cool.